Welcome to today's mentoring session. As usual, I'll be starting today's session with the weekly sectoral analysis, and we'll start with the top-down approach, starting with the monthly time frame of Nifty Futures. In the monthly time frame chart, I think I have nothing much to say. In the previous month, if you can see amid all these trend lines and everything, if you can see that we do have a high wave, not a high wave, sorry, an inverted hammer or a shooting star. So this is a clear sign that there is some sort of selling pressure available at higher levels. In the weekly time frame, what we can see is now the trend is down. More or less, I think Nifty Future is trading between this wide band, and I think the range of Nifty Future is expanding day by day. You can see initially the range was small. Now it is getting bigger. It made a bottom somewhere around at close to, you can say, 15,675. Then it made a top at 18,130, and now again it's coming down. Okay, so more or less the range is getting wider and wider. So there are two sides to it. Basically, if there are trades in your trading setup, then in a way it is good, because if we do have wide ranges to trade, then at least you will have decent chance that in near future you might get some good trades in your swing trading setup. And on the negative side, again, this is not a trending market. This is not a very good period to make money aggressively. If you see, this was a bull run, or you can say this is a sort of big correction, or we can say some sort of decent corrections which we saw somewhere over here. So this is not a trending market. This is certainly a range bound, but if the range is very, very big, then yes, you can have some decent sort of trades. Now coming back to the state of trend, yes, the state of trend is down, and we can see the Nifty Futures have closed below 61.80% Fibonacci retracement of this entire swing from 15,675 to almost the top of 18,168. In the daily time frame, I think if any one of you has seen my Nifty short-term view, I clearly mentioned that if we close below this particular trend line, which is holding on since the lows of March 2020, then there is a decent possibility that we'll be heading lower towards 16,225, 200, or maybe even lower. Now, what has happened over here is there is a small gap over here which has been filled, and many times it does happen in the markets that after a trend line breakdown, what happens is price tries to retrace, it tries to go up, retests the trend line to confirm that the strength or the selling pressure on that particular trend line is pretty strong enough. And after this pullback, then again it starts moving down. Whether this will happen this time or not, it's difficult to say, but yes, what we can see is a very small hammer. This the power of this hammer is not very, very strong. I don't give very big importance to this hammer because the size of the hammer is very, very small in comparison to all other candles over here. But yes, it can happen. And if it doesn't happen, possibly when the pullback doesn't come, then slowly and steadily, I think markets will grind lower at 16,225, or maybe even sub 16,200 levels, maybe even lower. All right. Now, Bank Nifty Futures. Bank Nifty Futures is slightly differently poised in comparison to Nifty Futures. First, I will go to the monthly time frame. In the monthly time frame, again, in the previous month, we do have a shooting star, and which clearly shows that there is a really good amount of selling pressure at higher levels. In the weekly time frame chart, we do have a strong, big red candle on the downside. Yes, it does have some upper wick, but this wick is coming up at a resistance, so there is no problem whatsoever. Only thing which is saving the banking index as of now is a particular trend line, and this trend line is just similar to the Nifty Futures chart. You can see this trend line has already been tested 3 times. So the trend line which was there in the Nifty Future chart, that was a probable trend line, and this particular trend line is now a complete trend line because it has been tested 3 times. Now, if Bank Nifty Futures tries to go down and test again over here, it will be the 4th time. And this particular candle is a sort of, you can say, a dragonfly doji, not exactly a dragonfly doji, but at least a small doji. And in the hourly time frame chart, if you can see properly, we do have a positive divergence. Yes, this is a positive divergence which has come up at almost at a level where we do have a trend line support. Now, probably there could be some sort of pullback coming up, but how far this pullback will continue is a important question to answer. Probably it can happen that this gap which has been made due to the gap down which happened today, this would be filled. After this gap down, probably if the selling continues, markets will try to come down and they will try to break this particular trend line support. All right, that is what I think in the hindsight which can happen. So let this pullback, if it comes, if this pullback comes and if these gaps are filled, and then if you have any swing trading opportunity in the bank nifty, then probably you can look at it, but you have to be very, very careful, because by the time, what happens is, by the time this pullback happens, and after this pullback, if there is a breakdown, and if the breakdown comes almost near to the trend line, then again you have to be very, very careful about that, then, because otherwise you'll be shorting at the support. So just be careful about that. But overall, I think the biasness stays on the downside. Once we break and close below this particular trend line, then I think the severity of the selling will even increase. And more or less, just like Nifty Futures, I can say that even Bank Nifty is trading within this particular dual trend lines. One is on the upside and one is on the downside. Now the private banks. Private banks are looking really weak. We can see in the weekly time frame chart, decent sort of selling pressure. We have a couple of inverted hammer, shooting stars, even a big red candle over here. And even in the daily time frame chart, we can see that this is a spinning top, and there could be a small pullback or something, because if there's a pullback in Bank Nifty Futures, there can be some pullback in the private banking stocks as well. But after this pullback, I think chances are, again, markets will come down. Two stocks which I have been watching. One is Axis Bank. I think Axis Bank somewhere over here was looking decent enough, was making some good candles. It was consolidating. And I think when this first candle appeared, I think in the previous weekly sectoral analysis or in one of my Nifty short-term view videos, I clearly told that this is not a good sign. And the stock is looking weak. And after this, the stock has continued to drift downwards. There is some sort of selling, there is some sort of support over here, but if this support breaks, then there is a possibility that the selling pressure will aggravate in this particular stock. Any pullback in this particular stock, because if you look clearly, then the RSI is oversold. If there is any sort of pullback which happens, all right, and then you should be looking at this stock as a swing shorting candidate. One more stock from my side is ICICI Bank. As of now, yes, I can say that it is not as weak as Axis Bank. It is also trading at a decent support. And you can say that this entire band from 710 to 695 is a decent support band. In the weekly time frame chart, already the charts have started looking a little bit suspicious. So if there is a close possibly below, you can say 695 levels, and it sustains below it, then possibly you will see prices coming down on the downside. PSU Banks. Now, PSU Banks were one of the stronger sectors and good-looking stocks. And if you compare private banking charts with the PSU Banks, even right now, they're looking slightly better than the private banks. But yes, now the trend is flat, is not up anymore. And in the daily time frame chart also, you can see the prices have started trending lower. If you look at SBI, which was once a long candidate, now it is trying to give a pullback. This pullback, which has started today, it might continue probably till 495 or maybe even 490. But once, if this pullback stops, all right, if this pullback comes to an end, and then if the selling pressure reinitiates, and then if the price starts coming down, then possibly you can look at SBI for a swing short candidate. but the timing has to be very, very precise. Metal pack. Metal pack, I think as of now, I have no views on this particular sector. In the weekly time frame chart, we can see that the trend is flat. It's trying to come near to a decent support band. You can see previous highs can become decent support band. And on the daily chart also, we do have a decent looking candle, which is a hammer. But again, there's a question mark in my mind that if a pullback happens, will prices be able to, surpass and go higher? Or is it going to be just a small pullback? If this pullback is very, very small, then I think there is no meaning over here, because we are not traders who try to trade very small pullbacks. Either we trade trends or either we are swing traders. So basically, if this pullback happens, I think we should wait and watch and see till what extent this pullback is happening. If the pullback is short-lived and if the prices continue on the downside, then I think again we will see some weakness coming up and this particular level might be broken. On the contrary, if this particular level is taken off on the upside, then I think my views might change about this particular sector. Auto pack. Auto pack, you can see clearly that we do have a shooting star in the previous week and now we have a big red candle. So it is clear that some sort of selling pressure is evident in the auto pack. And this is, you can say, the previous low. This is also a low. So I can see this price is probably coming down till possibly 10,287 or something. Once I think this particular low might be broken, then you will see little bit selling pressure getting aggravated on the downside. Finance. Now, finance is looking clearly weak. You can see a big inverted hammer, two big red candles. In between also we have a shooting star. So all the candles, mostly out of this 1, 2, 3, 4, 5, out of 5 candles, we have 4 negative candles. So it is very clear that these particular sector is looking weak. I think we should concentrate on this sector, especially on Bajaj Finance and Fmcg. Currently, these stocks are oversold. They are far from the moving averages. So in case if there is a pullback or something and the entire sector moves on the upside just for a short-term pullback, then I think we can fancy our chances and look up to these stocks as swing short candidates. But again, you have to be very precise in your timings. IT pack. IT pack, I think I had shared my view somewhere over here that some sort of contrarian pullback can happen. But these contrarian pullbacks at times are very, very notorious, because if the selling pressure in the market is very high, it can keep breaking the lows and again it will give you a sign of a pullback, which we do have right now. We don't have a reversal sign, but we do have some sort of sign that probably the selling pressure is getting weaker, and there's one positive candle over here also. So possibly on Monday or Tuesday, if we have a big green candle somewhere over here, then chances of pullback in the IT pack might increase. But obviously we are not contrarian traders, but as a swing trader, if there is some sort of pullback which happens, then you can fancy your chances looking for swing short candidates in the IT pack. Pharma. Pharma is looking weak. You can see a big red candle over here. Previous week also is a negative candle. So in the pharma pack, chances are what has happened over here, basically this entire green candle, it has taken the midpoint as a support somewhere over here. If there is a pullback, probably this pullback might happen. It might not be short. It might not be present in the market for a very long time. If it is short-lived, and if you get any stocks in the pharma pack, you can use those stocks as swing trades, but be careful that don't use options in the pharma pack, because the reason is pharma packs do have tendency to, chop around, and then possibly suddenly there will be a momentum on the downside. So you have to be very, very, very careful when you trade options in pharma pack. FMCG pack is the only sector as of now which is showing some sort of strength. In terms of the overall chart, I can completely agree that it is not somewhere over here or near lifetime highs where I would say this is a very strong sector, but probably just due to one stock, which is ITC, it is able to hold on to its gains which happened recently. It has not totally collapsed because many other stocks in the FMCG pack which I saw, I think they are coming down. Only one stock, ITC, which is holding on. You can see it is also trading at a decent support band. So ITC is one stock which is looking positive. But again, as a trader, I'm certainly not a type of trader which would go long in just one stock and all the other stocks are going down. But yes, the stocks certainly looks positive. Realty pack is looking pretty much bearish. You can see prices are moving down and they're moving very fast. They're not just coming down, they're moving very, very fast on the downside. In the weekly chart also, things are not looking very good for the realty pack. And if you check properly, RSI is oversold. So any sort of pullback, a decent pullback, if it happens, then you might fancy your chances to find stocks in the realty pack for swing trades. But when you're doing all of these things, when you're finding swing trades, do cross check where is Nifty Future also. Just check once where is Nifty Future at that point of time, because if your index or your stock, when it is trying to give a pullback at that point of time, even if Nifty Futures is also giving just a short-term pullback and after that there's a possibility that it might start coming down, then probability of your trade going in your direction is very, very high. And recently, you know that the gap up and gap downs which are happening are very, very lethal. So in certain market scenarios, you have to be very, very watchful when you initiate trades. All right. And even right now, if you are a new trader, if you're a seasoned trader, if you have been in the market for years, it's not a problem. But if you're a new trader, please be very, very careful in your position sizing. Kindly trade with only 50% of your position sizing right now. If this sort of market is new to you, it is completely all right to make less amount of money. Staying alive, staying in the game is more important rather than, being rich overnight. So just have this thought in your mind when you are punching your trades. Consumption pack. I think consumption pack is on the verge of a breakdown, according to me. You can see this candle is certainly not very, very inviting for the bulls. And you can see one hammer, then we have an inverted hammer, which is sort of a shooting star, and then we have a big red candle. So the signs are not very, very good. Only thing is it is trading at a decent support level. I think once if it closes below this 50% retracement, then I think things will be clear. And if the selling pressure persists, so I think we'll be possibly testing 6560 and maybe even 6472 levels on the downside in consumption pack. Mid cap index. Mid cap index in the weekly time frame chart is looking negative. In the monthly time frame chart also, if you see, the previous month was not very good. It had a shooting star. Overall state of trend not looking good. In the daily time frame chart, it does show possibly a dragonfly doji, and the interesting part, it is showing a dragonfly doji at a 61.8% retracement, where there is some sort of candle cluster present over here. Possibly there could be some sort of pullback on the upside, but you need to be very, very watchful till what extent this pullback is happening. If the pullback is very, very short-lived, means if the pullback is not very large, after a pullback, if the market starts consolidating and if the selling pressure persists, then possibly you will see new lows and this low will be broken. But again, I am not predicting that the low will be broken. I'm a reactive trader. So what I'm trying to say is, after a pullback, if a consolidation happens and after the consolidation, if a new sell-off starts, which is a probability, then this particular level will be broken. All right. So I hope this video has helped you. And again, I'll just repeat one thing again and again. Please lower down your position sizing. Don't be very happy that this particular trend line breakdown in Nifty Futures has been broken. So we'll be having a wonderful time going short in the market. I'm not saying no, we won't have. I'm not saying that. But, at times markets can continue going down even with a gap up or a gap down. Because, when markets are going down, price behaves in a different way vis-a-vis when markets are going up, price behaves in a very different way. Okay. Because if you see the ATR indicator, I'll just plot this indicator. I've been watching this indicator very closely. All this time when markets were within a range, when the candles had shrink in terms of size, the ATR indicator didn't collapse from this 364 level to possibly to a level of 152, which was very, I think, normal. It just came from 364 to 283, which means that volatility was not ready to come down. And if after a pullback or something, if market starts coming down heavily, then again there is a possibility of a rise in volatility. Okay, so just be sure that your position sizing is 50%, especially if you are a new trader. All right, so trade less, trade wise, stay safe. Thank you.